So what we want to talk about today is some strategies and setups that most of you already know these things. If you're just in Jumpstart, you may not be aware of them, but if you have Launchpad or Nth Degree, you'll be aware of them. But hopefully there's a little different approach, maybe one little twist that you'll tweak something in your mind or your trading understanding so that we can have some benefit from the webinar. But I'm going to be using the 4-hour chart. This particular slide is pretty good. Now, so what we're going to be doing is, and a lot of you recognize what I'm talking about here, is the early bird is one of the signals we're looking at. Okay, what is an early bird? It's a color change. There's an early bird there, and there's an early bird there, there's one there, and there's another one there. So all those are signals that said you possibly could start considering taking a look at that trade in that direction. And you can use different time frames, and you customize it to what feels good to you. For the illustration, I'm using the 4-hour, the 1-hour, and the 30-minute. Now this is an entry. You'll find that this is going to be a little bit earlier entry than what I talk about with just the Jumpstart entry. This is timing it a little bit. The two things you need to know and be aware of are the early bird and the Norwood alert. We're seeing this Norwood alert right here. In just a little bit, we'll go through some of the things and just look at the current time frame so you can see what to do. The concept is, though, you go there on the 4-hour. As soon as you get an early bird, you take you start looking. So right in here is about as early as you would see it. On the 1-hour, what are you going to see? Everything's lined up for a short trade. Now it's breaking some support over here. So we're going to time it and say, what is this, the 30-minute going to do for us? 30-minute? Is it fresh? No. Would I take it? Probably. Why? Because I would take it on the open of a bar. And there's one question that some people are going to ask. Well, do you use open or closed bars? On the entry time frame, I use the bar when I see it, if the setup's there. If it's a little bit late, I may not take it, but if it's in the first 15 minutes on a 30-minute bar, then there's a good chance I'll probably take the trade. Let's go back and look at this. 4-hour, they gave you a heads up. They said that's kind of the direction it wants to go. The 1-hour, did it confirm it? Yes. Which way do you think that trend is going to go? It's going to take a lot of effort to change it very quickly. And there we have it. We enter the trade someplace in here, one of those two bars. At most, it went against you about 5 to 6 pips, 10 at most, and then it started going your direction. You can manage it and get out there, or you could have kept on trading that as long as the 4-hour is in that direction, so which that would have been 51 pips in this illustration. Okay, that's what I wanted to show you on that one. Now, the US Swiss, I want to take a look at this one. Hotline right here. Where's the early bird? It's right here. Where's the Norwood alert? Right there. That's where we would have been looking before in other illustrations that I showed just in strictly Jumpstart strategy. Now we're getting into some of the other material. We start seeing things a little bit sooner, a little bit earlier. Right here. Was the 1-hour, did it confirm? No, it didn't confirm until the very next bar, but it actually had a Norwood alert. Now we're going to go to 30-minute. 30-minute wasn't ready right at that spot, but I'm going to mark this. I should have marked that 1-hour. We'll mark the 1-hour and see what the 30-minute does. Okay, see the 30-minute was set up to go. The Norwood alert had already happened. Was it fresh? Yes, that was a good trade. So what are we looking for here? An earlier heads up. We're looking for alerts. The alerts can be observed manually, or else you can use the automated version. What I'm showing you can be done manually. That's the thing that I want you to be able to see, so that if you can do it manually, then you'll know how to do a whole bunch more when it's automated, because you'll have more things being brought to your attention. This way you're only going to be able to manage a few currency pairs, but when several of the currency pairs start to move, the alerts will give you the heads up to take it. So we're looking for the early bird is the first signal. Now I'm going to go a little bit further and move this over. I'm just going to place it right there. someplace in the middle of where this trade is going short. Is that a place to start looking or keep looking? Yes, it is, because it says the momentum's going down. Does the 1 hour confirm that? Yes, it's not going down as strong as it was, but it still says it's going down right at that point. And the 30-minute, not right there, but the very next one, it said it was going down. Overall, 20-30 pip move. Yeah, it took a while. Put your stops on, you would have been able to take a trade on that. The point that I was wanting to get at there is, just because a market is not fresh doesn't mean you can't get into it. The key is, fresh will make you more pips than something that's not fresh. It's a higher probability trade when you get fresh. Look at this white line here. It just happened to be there from the other chart. This is closer to being fresh. If we'd waited until here, till it crossed, that's what the jumpstart strategy would have told us. Then right here, this says heads up. So roughly we got an extra 32 pips early heads up to start looking. Now let's go see what the 1 hour. Not quite, but right in there it said okay. Well, it said okay there, but it's going sideways. So someplace on this bar you could have actually started looking for the trade. Let's look at the 30-minute. It said to wait a while as well. So over any place over in here, then everything started saying start trading in that direction. Okay, what's the concept we're trying to get here? Let the alerts do some work for you. Don't work it so hard. How do you know what direction that trend is? The heads up is, which color is it? Is it the color you have chosen for your down movement, or is it the color going for your up movement? That's all you have to look for. By no means is that the major trend. That is the momentum of the trade right at that point. Now, what you really want to do is find what the major trend is, and then when it starts pointing in that direction. See, this is a downtrend. You can tell right over in this area that it's a downtrend. So from that point on, you only take things that are going short. And yes, this could have given you some moves too, but if you just take those that are on the higher time frame, when you see an early bird going in the direction of the trend, going short, so just back out once in a while and look to see what the direction of the overall trend is doing, and then that kind of gives you an idea as to even the higher probability trades. So we know that this was a really good trade right here when it was fresh. I'm going to put a line right there, and I'm going to put this anchor below it, and then I'm going to move back to zooming in a little bit. Okay, right there we know what the trend is because we just looked. And so let's say you didn't see anything off to the right, but you saw this turn red. Now we're going to go to the 1 hour. Okay, that says it's pretty good. And the 30-minute, that already happened. You're going to be safe taking a trade right there. That happens to be at the opening of the U.S. session. At an hour and a half into it, you get a good signal. Well, you're not necessarily a signal, but you get an indication that it really was starting to take off, and that's where the big move started for a few pips. If you'd wanted to stay in it, then of course it was going in the direction going short. You may have gotten out there because it's going sideways, but there's another heads up. Okay, now you hope you get the concept. Look for the early bird signal on a larger time frame. I would suggest no less than the 1 hour is your early bird signal. The day, the 4 hour, the 1 hour. But use 3 time frames to do that on. Then on the 3rd time frame, look for an orbit alert. You can see, why would you not take the blue one and why would you take the red one? Well, you're looking at the trend. You know this trend is down, so you don't take any blue orbit alerts. Is what that says to you when you get one of those. It says, heads up, I'm still in the retracement process. But as soon as you get the other alert going down or an early bird going down, then you know that you're getting a good signal. But allow for these trades to retrace. That's one of the things that you need to be aware of. Okay, now that's what I want to do is go to the Euro New Zealand. I looked at a couple of things here. I'm going to start looking at the first beginning of something that's close to only a few hours old. Now, what are we looking for? We're looking for, it has to be red, and it's better if it's red and below. Right there, it was blue, but it was below. Okay, so what does that tell you? So it didn't confirm. So you want the early bird. It probably happened right here on this bar. This one just right at the very end, it switched red, so I'm going to put the mark on that one. Now we're going to the 30 minute. What did the 30 minute say? It said, well, that's already gone there for the Norwood alert. You could take that trade. Right now you'd be up just a little bit. That's looking for a fresh early bird. That's what's happening right now. Now I want to go to the pound Australian. Okay, right there. What's happening? Have you thought what you want to start looking for? Well, it's blue. Is this above? Yes. Which way is the overall trend? Down. Okay, now that's all you have to do as far as analyzing it. Let's see what we want to do. Does the 1 hour say go? No. It's red. We're looking for a blue, and it's above, so it's getting set up. Does the 30 minutes say to go? Said no. It's red. It's still above. It's waiting for a setup. So possibly a little position here. You can start looking for breakout strategies. So this is what you would then start looking for as a watch list candidate. It's giving you a first signs of a heads up. So what would you look for? You want to set the early bird when it goes long on the 1 hour and or the 30 minute, and have the Norwood alert set long on the 30 minute. That's what you're looking for. When the male crosses the zero line, that's going to be close to the time the Norwood alert formed. Not always, but close to the time. So that's what you would be looking for if you don't have the alerts package. So you can use these things as you're going along. So what I'm going to do now is go look for some other things. Now that's all I had planned. So anything I do now is I'm just looking. Okay, what would you do here? This is, see what if you looked at this early, there was the big move. Currently, yes, it's crossing. So that says it's kind of, you can tell it's going sideways. That's a watch list, depending on what the other time frames tell us. See right there, it's a watch list because this is not matching up. And so what are we looking for? We're looking for a Norwood alert on the 30 minute going short. If you're not sure what the overall direction of the trend is, don't expect very many pips. Don't try and hit a home run every time. Maybe you take 15, 20, 30 pips would be your goal out of some trades. If everything lines up, maybe 30 pips. If not very much is lining up, shoot for 5, 10, 15 pips. You adjust that. That's the artsy part of trading. You decide how you want to trade an account or a trade based on how it's setting up. If I give you exact signals, I'll be wrong part of the time. If I give you a general rule of thumb, I'll be right a high percentage of the time. I'm giving you general rules of thumb. Trade in the direction of trend, find out what the trend is. What if you can't tell what the trend is right here? Hit the minus key, or I don't have that little minus button up here, the hourglass. I've taken it off. So I use the minus key. Okay, what's the trend? There is really not a trend there. Let's take a look at a larger time frame. Is there a trend? It's kind of been going up, but it's really sideways. So there's not a lot of a trend there. So how do you want to trade it? Very cautiously and wait until the setup's good. Let's look at the next one. I'm just going to go down through a few here. Is this fresh? No. Is it headed in the down direction? Yes. Has it been going sideways? Yes. Fresh is the big key. But is everything looking good as far as the figuring it out? Yes. Is this going down? Yes. Is this above? Yes. So that's really not matching up, and it's got an upward signal right there. Let's go to the 30 minute. See, it's not matching up. That would keep you out of that trade. It's not even a watch list because the 4 hour hasn't even changed yet. Okay, this is not fresh. We can see that sideways. This is how you create a watch list using the early bird alert is what we're covering here. See, you want to start looking for your watch list back over in here. Then you'd be up in this trade. You'd have a potential of being 45 pips up if everything worked out. So I'm going to put this line right in here and go see what it looked like right at that spot. You could have taken a possible trade there. It's 11 pips. As soon as it gives you an exit signal, get out. Plus 2 pips, minus 5 pips, get out. The next setup, okay, there you have 20 pips. Do you lost 5, 10 pips over here? That's okay. You made up for the pips right there. So now what I'm looking at is just watch list and how you use the signals. That one I don't even want to look at because it's too much of a sideways. That's not fresh. This is going sideways. This is going sideways. But can you see that this might be a retracement? The trend looks like, at least in this run, it was an uptrend retracement. Watch for something to happen there. That could be a watch list. Okay, right here, early bird signal. It says it's going long, but the normal alert says it's going short. 4 hour. It's not reading right, and it's in a channel. But wait for these early birds. People are saying to me on a regular basis, well, how do I catch those big moves? Every big move starts with an early bird. Not all early birds are big moves. So look at every one of them. Look at this one. It wasn't a big move. It was 20 pips. Now if we went and checked it out and saw that there might have been a little bit of trade there, was this a big move? It went 35 pips, but if you got 5 pips out of each one of those, that would be great trading. And then the big one comes. Now if you traded it clear up to here, you got 150 pips. So to find the big moves, you need to look for early birds. Every big move starts with an early bird, but not every early bird is a big move. But so look at a lot of them. So how do you save time? Get the alerts package. Let the alerts be brought to your attention, and then create a watch list, and then the signal is going to be brought to you. Well, there's an early bird there, but there was a norwood alert there. So there were 2 signals right there that said which way you may want to be heads up and trade. Let's go to the 1 hour. This said it was okay right there, but there was a gap down, so you may not want to take it right there. Right here, that's still after the gap. You may want to wait till it retraces to fill that gap. Then from here on, there were trade signals going short. I hope this is making sense to you. It's very simple. You don't need to look at 1,000 things. Look at those things. Then as you get the skill level and move into the nth degree, then there's a whole bunch more options open to you. You can fine tune and time your trades even better. But this is what you would want to watch for, even if you were in nth degree, is watch for the early bird signal as one of the 2 and the norwood alert as the second of the 2. And learn to use them simultaneously or one at a time, one setting up for the other. And you can actually spot those based on the manual way of looking at things. Look for the cross fresh. See, this is probably a fresh cross here, but when it's getting close, that norwood alert there would have given you heads up. This is a 30-minute chart. You may not have wanted to trade that one. This one, maybe, but let the larger time frame tell you. That vertical line right there, what does that tell us? Well, it says it's still red, and it's on the 4 hour, so we probably wouldn't be trading that at all. Was that okay? Yeah, that was a heads up, but I wouldn't be trading this one right now. I'd wait till that 4 hour gave me a little more confirmation. Which way would I be looking to trade this one? I think I'm looking for a long position. Am I looking for it to go thousands of pips? No. I'm thinking it's probably got a good 100 pips in it, maybe up into here. So based on that, keep that on your watch list. No buy, sell, or hold. It's just a heads up. So from right here to there, do you think there's a possibility that it might move part of that for a good safe trade? Okay, so the 2 things you need to look for would be the early bird and the norwood alert. In that order is most preferably early bird on the larger time frame. confirming on the middle time frame and the normal alert on the smaller of your 3 time frames that you choose. Well, just go to at least the 4-hour time frame and just wait for that to happen. Wait for the setups to come to you, and then wait for the smaller time frame. If you want to really develop your patience, try the day, the 4-hour, and the 1 hour. The same principles will apply. Here's a day chart. There was an early bird right at the end of that, so this was the early bird. Well, that moved 300 pips. So there was generally on that 1 day chart, the market went up and down, up and down, up and down. Let's see what the 4-hour did. Went up, down, up. It was pretty straight up. The 1 hour, see, it rested up, down a little bit, up, down a little bit, up, down a little bit. So learn to look at things and look for fresh things. If it's really choppy and hard to read, go look at someplace else. If it looks like it's pretty easy for you to read, take a look at it. So there's an uptrend right here. Okay, right here on this 1 day, well, there's 170 pips in top to bottom in probably one. Well, that would be, I think that's a weekend because it was so small. So basically 1.5 days, there was some decent move right there. As soon as you get a heads up on a day chart, start looking. That's a heads up for you also. You may not want to take these because the trend was up. So just take blue, blue, blue. And here there was some good pips there and some more good pips there. Just looking at the day chart and say, okay. And you'll hear me sometimes say, look at the day chart as your main chart. Other times I'm saying, look at the 4-hour. It's what I'm saying is find the direction and trade your strategy. The day chart sometimes is hard to read. The 4-hour is sometimes easy to read. Figure out which one is easy to read and trade that one. And become artistic in your trading. Not, you got to be mechanical in doing the same things over and over, but artistic in moving your paintbrush the same way every time to create that beautiful picture of profitable pips. You can enter a trade on the 1 hour or you can enter on 30-minute. The main thing is the 3 time frames that I just talked about, and take a whole bunch of trades, practice it, find out what simulated trading is, and look for every early bird signal that comes along, and then go to the smaller time frame and look for the next normal alert that comes along. Take a trade. In simulated trading, you can get to, in 15 minutes, you should be able to get 5 to 10 decent trades out of most currency pairs in using the 3 time frames, because you can go fast, you can go quickly. Do it a few times and you get faster and faster at it. So it's a different indicator. It's Launchpad. I've actually been showing you how to trade using Launchpad. If you have it, you will recognize that. If you have nth degree, you'll recognize that you're able to do the same thing in nth degree. If you're in Jumpstart, you've seen some glimpse of how our material works when you start getting more of the system. There's more things you can do than the thing we talk about in Jumpstart. How many currency pairs do I focus on? Well, I'm going to show you a little way that I do things. I found that after trying a whole bunch of different ways of setting up my market watch, I found that I like this way probably as well as any of them. I have all my US pairs first. So if one of the US pairs is moving, I start looking at the other US pairs. That is the signal that says, hey, something might be moving. Same way with the Euro pairs, the pound pairs, the Australian pairs, and then anything that has the yen in it. Now the yen has a little bit of everything above. The only place I have one of the yen pairs out is the US yen. The rest of the yen pairs are all grouped together. So here's a simple way to do it. Watch either the euro and one of those pairs or the pound in one of those pairs. And then you'll have the euro dollar, the pound dollar. You'll have the euro Australian, pound Australian, euro yen, pound yen. So it's very simplistic. If one of those euro pounds pairs or pound pairs is moving in one of those currencies, then take a look at the others If it's Euro Swiss, then look for anything that has Swiss. Euro New Zealand, we'll look at all the New Zealand pairs. There are 2 New Zealands at the bottom. The rest of the New Zealands are in with the rest of the thing. So if you see the Euro CAD moving, then look at the US CAD, the Pound CAD, the CAD Yen, the New Zealand CAD. That's how you can find some pairs and concentrate on them. Come to our trading room in the morning, and there's a currency volatility chart. We can show you how to find it. Now, Michael, there's a link that shows them how to do this right on the Trading Basics.
Yes.
And I can't even remember
it's
what it's called.
Forex volatility.
So go to the Trading Basics, find out the Forex volatility. That'll show you how to get a list. It'll show you also the currency pairs, how much they move on a daily basis, their average daily range. And those that move above, in my case, the top half would be roughly above 80 pips a day. Those are the ones that I'm going to probably want to trade more often. I do trade those pretty consistently that go down to anything above 70. There's a couple right in the low 70s, and it jumps up close to 80s for the rest of them. So anything that trades 80 pips or above, those are the ones you look at. It doesn't mean you couldn't get a good trade in something else, but that's how you would find the trades that you look at. Trade the ones that move the most. If you got a pound pair and let's say you got the pound New Zealand and the US CAD. Which one would you want to trade? Well, the pound New Zealand moves close to 200 pips a day, 190, 210, in that range. The US CAD moves 60 to 70 a day. So, do the same work, you want to trade one that moves the most. So go to that currency volatility in the Trading Basics. That'll show you how to get that list to know which pairs that might be the best to trade. I know that in the course material I've been concerned about this for years. We're saying do this, this, and this. Well, that's helpful when you're learning, and then you get something to become mechanical on. But then you need to become a mechanical artist. Learn the art of trading. There's the mechanics and there's the art. The art is when you're in flow. You know and have a feel for what the market's going to do, how it works, and then you can flow with it to know whether you should set your stop a little closer, a little further away, expect a lot of pips, a few pips. That's the art of trading. You want to, if you're drawing trees on a canvas, sometimes it looks nicer to put short trees, sometimes it's good to have big trees. Generally, are there more shorter trees? Well, as far as the perspective as to the size on the camera, some of them are closer and further away. There's more shorter trees, so expect there's more shorter trades. And there's a few big trades. And that's the art of trading, and that's how you need to take it as far as playing a ball game. Not every hit you make is going to be a home run. Some of those are going to be shorter trades. Is every time you kick a soccer ball into the goal, does it go in? No. Do you sometimes kick it and it gets closer to your point of reference? Yes. That would be considered a base hit. You're moving it down the field, you kick it across to one of the other teammates, go in the same direction, make a few pips. He kicks it back to somebody else, making a few pips. Then all of a sudden you lose the ball and something's going the other way. You sit on the sidelines, all of a sudden the home run comes, or the score, the goal. You get a side-out kick. I've seen corner kicks, and they kick it in, and someone of their team members standing right next to the goal heads it in, and so that was a big home run or a big scoring thing. So a lot of analogies, but not everything turns out to be the biggest thing ever, the biggest explosion, the loudest noise. Sometimes there's a lot of little pops before you get a big noise, a lot of little lights before you see the big lights. Anyway, I hope those analogies help you to realize that just be consistent and get a feel for the market. What would you do with this? Look at that picture right there, a picture says it's going sideways. So you need to have a little strategy that's a breakout strategy. It's got a Norwood alert that just formed, and the early bird is going, just turned blue since we watched it. So it's like it's really mixed up. So it's a watch list candidate. Look at doing a little bit of retracement on the 1 hour, the 30-minute as well. 30-minute now is turning red. Does that mean it's going to come clear down? No. It means that it's headed that direction right now, and that's why you want everything to line up. You want the 4 hour to be red going down. Now this 4 hour bar, it's going to be about another hour and 15 minutes before it forms a new one. And this one may or may not form a new one coming down. It may keep on going up before it comes down. And that's where you line them up. So basically, it's a great watch list candidate. Why? Because it's going sideways. The longer that goes sideways in this rough channel I've drawn here, when it breaks out, it's probably going to have a good breakout. When does it usually break out? When you get an early bird or a Norwood alert would be 2 times that the signal would say heads up. There's possibly a trade right in there someplace. Right, it's been ranging or going sideways for quite a while. And so when that happens, that's a good sign that something's going to be happening. Sometimes a small losing trade happens just before the big trade takes off. So be willing to take a small loss, get out, and get into the market when it really takes off. And that's not 100% either. But that's just an observation that a lot of times that's what happens. Yes, Nth degree has all of the indicators. Nth degree doesn't have, there's nothing more than Nth degree. There's strategies that enhance what you see in Nth degree, but there's not any more indicators than Nth degree. We have systems where we'll use candlesticks as candlestick patterns, but these bar charts still give you a candlestick pattern. Okay, those are candlestick patterns. If you look at those bars, they're open, close, open, close, open, close. So if you look at them, sometimes you need to put them on to see them more clearly. There's candlestick patterns, and then there's Fibonacci's. Those are not indicators, they're tools. There's ways of finding, fine-tuning your trading. So we use the candlestick patterns and Fibonacci's are two of the tools that we use.
On the alerts working on multiple computers, our licensing agreement with you allows you to install all of the alerts on 2 computers only, not 3 or 4. But if you have a laptop and you have a desktop, you can make that installation on 2 computers.
Oh, very well, thank you, very well. I just wanted to ask about firstly about your risk reward. Mm-hmm. What sort of risk reward would you typically go for? And secondly, what percentage of your account would you risk on any given trade?
Okay, the risk reward, we like to shoot for at least a 1-to-1. Those are your base hits. Occasionally you're going to get the 1-to-2, 1-to-3, 1-to-4. Those are your home run kind of trades. But try and shoot for a 1-to-1. Now, if a trade, say you have it set out, you think your stop loss and your take profit, and it's going to stay inside of your stop loss, but it never reaches your take profit. Maybe you need to close the trade manually. If things start changing, close the trade and take a small loss or a small profit. But you're still shooting for a 1-to-1 risk-reward ratio. And what was the other part of the question?
The other question was what percentage of your trade would you risk? What of your account, rather, would you risk?
Now, that's an interesting comment because some people will risk more. We would suggest doing no more than about 2% per trade. And sometimes you might say, well, I'm going to be trading 3% per trade. But here's an interesting point. Someone has 2% per trade. Maybe they take 10 trades. Well, that's 20% of their account. That may be more than they would feel comfortable with. So in that case, if you know you're taking 5 to 10 trades at a time, maybe you would want to lower it to 1% or 1.5% of the trade. If you're just taking 1 or 2 trades, then a couple of percent, so you're still less than 5% of your account. But the thing that happens
Right.
when you take multiple trades, I don't mind putting more trades on because, and having it even at 2%. When you get that 10 trades on, generally something's really happening. You're not going to keep on adding losing trades. Most of the time when you take multiple trades like that, more of them are profitable. And so some of those, that profit in those accounts is covering some of the loss in pips that you would have, lot size or percentage of your account, because you actually have a lot of
Right.
profit protected. So that's kind of an art right there when you start trading more. So maybe one person could actually take 2.5% per trade because they know that they'll have more positive trades, and it's not going to affect them at all because they've got a lot of profit protected. Hope that
Right.
can give you some ideas as to how to do it.
Okay. And finally, you're using 3 time frames. Is that better than using 2 time frames? I mean, that will reduce the number of signals you get, but is that does that eliminate the noise?
Well, you can trade with 2 time frames. The noise is actually being filtered out by the smaller time frame. You're getting the direction, and it may go the opposite way, and that might be noise if it's going the opposite direction, but as soon as it comes back in line with the larger time frame, there's really not any noise there. That's a loud whisper that, hey, come take a look at me. It might be time to trade it. I don't like it. It's not really noise. Let me switch to something that I think is noisy.
Right. Okay.
This is noise right here on a 5-minute chart.
Yeah.
And then if we actually, we'll mark that, and then we'll go to a 1-minute chart. Let's see, all of that is noise. Now I'm going to take that and put a line right there on that anchor. Now let's go up to, let's say, a 30-minute. See, there's not really a lot of noise right there. Yeah, you can see that it went sideways. You can see that it went sideways. And so if you'd entered that, it looks like it's going sideways, but it's really not, because when it came below that 0 line, it started giving you a trade that was going in the right direction. You go to the 1 hour, there's less, and the 4 hour, which may have told us, well, the 4 hour was going sideways to start with, so that may or may not be a place you'd want to trade. But find that noisy spot. A 30-minute is not a noisy time frame for me. Anything less than that. 15 is really not even that noisy. It's the 5 and the 1 that really get noisy.
If your 4 hours is the largest time frame and the 1 hour is the middle chart, can you use the 15-minute chart instead of 30-minute chart for your entries to maybe even get just a couple more pips out of it?
You can if you want. Test it, see what works for you. Yes, that might get you a few extra pips, and if it does and you get comfortable with that, there's no problem with that. But if you keep on losing, then I would move back to the 30-minute. But I would say then if you're using that 15, make sure that the 30-minute is pretty solid confirming also. And then the 15-minute is an excellent time to enter on.
I do have a practical question which should be of value for the new people who are only in the early days of trading live. I have in front of me the AUD-NZD chart, and I go into the H4.
Okay, wait, I missed the currency pair. It was cutting out.
Old New Zealand. AUD.
Oh, Australian, New Zealand. Okay.
Yeah.
Let me. Okay, it's right here. And you said the 4 hour.
Yeah, the 4 hour chart.
Okay.
So tell me when you see it.
Okay, I'm there now. Okay.
Okay, the 4 hour chart shows a nice downward trend, which I've been in for a while, and earlier in the day was making some money. But when I look at the M15 now, the M30 now, I'm getting what often happens, a signal of change of color in the Heikinaichi and the crossover of the MAs. Should I be exiting or should I stay in? And that happens so many times when I'm trading.
Okay, here's the key that I would look for. You use this as your larger time frame, and this was a confirming time frame, and I'm just going to guess that you may have got in here or up in here someplace.
Yep,
if you've been trading it for a while.
I got out when it changed down towards the bottom there.
Right in here.
About 10 bars ago.
Okay,
I exited.
So there's 2, 4,
well,
6,
maybe
8,
15 bars ago now.
Right in here, in this area. Okay, now the 15-minute.
But yeah, when it changed color on the M15 or M30.
Okay, those would be 2 good exit times. Now it all depends on which time frame you want to manage it on. In the beginning, I would suggest that whatever time frame you enter the trade on, manage it on that time frame as well. Now there are some strategies and ways to manage it on larger time frames, but you have to have certain setups before it would give you a heads up to say, hey, this is strong enough, I think I'm going to be able to go to a larger time frame and manage it. But what you did right there would be good exit signals based on what our course presents. When the market starts telling you that it's going sideways, it's time to get out, well, it looks like you got out and come out with a few pips. So
correct. But I'm back in again now because I saw it change back. So in fact, on the H4, it never changed anyway.
Right. So if you got in right here.
Yeah, that's where I got it. Or just after.
Came down. Well, see, maximum only came down about 10 pips if you got in right there.
Yeah.
And the spread on this currency pair is about 4. So that one can, even when it gets 10 pips, it's really only 5 pips in your favor.
Yeah, that's right. All the New Zealand's are higher spreads.
Yeah, right. Generally they are.
Higher cost spreads.
Yeah.
Well, thank you. So are you really saying, though, that I should have exited as I did on the lower time frame, even though it was still continuing on the higher time frame?
Yeah. I mean, that's what I would suggest. Let's take a look at it right here. Okay, one of the words you want to keep in mind is fresh. Is this fresh? Is 1, 2, 3, 4, 5, 6, 7 with the gap, and 8. 8 time frames, it was showing the momentum was going down.
And you recognize a bar that is forming that is kind of a rejection bar there, Kirk.
Yeah, right here is it's a hammer. That is a candlestick pattern. Let me pop that up.
Yeah, I'm familiar with those.
Okay, so that's kind of forming a hammer.
They don't always ring true.
No, that's true.
Because this one's still in the development, but
yeah,
you think the chances are, let's see, we have about an hour left, so this is 3 hours in this 4-hour chart. Generally speaking, it's probably not going to go most of that distance back to the bottom third of that bar. That's not its history. A news announcement could take it there, but I'm thinking what would happen is it would form a new bar, and the new bar may go back down that direction. So
right, but even looking at the 3 bars ago, how much of a similar pattern was being shown, and yet it still went down another 2 bars after that. But I've taken up enough of your time on that.
No,
I do have a
great.
second.
You're right here, though. That's a good point. See, this is forming a hammer as well, but it closed lower than where it opened, so this is a stronger hammer resistance than that one. Then it became what we call an outside bar coming down.
I know those two.
Yeah, so those are 2 tools that we use.
Bearish.
Yeah,
I do follow those bearish signals. The second part, which I said I had some success with using the 3 time frame approach, and I recommend that to everybody else. And my question was, does it matter, like when I look at the AO and the MAO, the MAO and the AO, sometimes the bars are quite short. I assume that may be because less activity in the market, especially on this particular, perhaps on this particular currency pair. But when the bars are low, do you still take an entry even if it conforms everywhere else?
So like, I think it's what you're saying, you see right here where it's close to the zero line and where this is really far away?
Yes, yes.
Okay.
Yeah, and sometimes even the highest are not very high.
Yeah, so this is a 4-hour time frame. Here's one thing you can look for when that's happening. When you see this kind of a pattern really close and not getting too far away, you'll usually see this kind of a pattern up here. That is a sign that...
Yeah, sideways motion, yeah. I recognize that. And so sometimes the setup is perfectly ideal, except that the bars are shorter. I have been taking the entries, and they have been, I think, working out. I can't remember now, but in the live trading, I'm a little bit more cautious. But when I see those bars not being so extended, I wonder if I'm wise to take the trade when even though it is setting up properly according to the H4 and the shorter time frames.
Right. So let me share this with you. So when you see this kind of pattern that you've described, and you've seen quite a few of those, look at this.
Yep.
Then draw some kind of an area of support and resistance lines as you think, well, it could break out one way or the other. When it breaks one of those, then you go like this. See, the 4-hour gave us heads up clear over here. It was. Let me put a line on that one too. Okay, the first one is where it was give us heads up with the early bird, and the second one was where it was hitting that support level. Now let's go to the 1 hour and see what it looks like there. This, see, it was above, and that would say, well, to confirm it really good, it needs to have been the very next one before it was really good. So that's another hour. Let's look at 30 minute. 30 minutes says, okay, if you'd taken a trade right there, it was only 5 pips. So it wasn't a big trade.
Right.
But it wasn't breaking out below this line. So the point would be, heads up here when it actually breaks here, and it broke right at the beginning of that time frame. Now let's look at the 1 hour on the second line. The 1 hour said, yes, I'm below. And the 30 minutes said, yes, there's an orbital alert right there. So if you'd taken that when it went 27 pips in your way, in your direction, but then right up in here, after about 10 pips or so, there was an exit signal. So you get out. Then you might get back in. Eventually, you're going to hit one of these for 90 pips.
Well, thank you.
So when you see these going sideways, look for support and resistance levels, and then when everything lines up properly, if this one doesn't look really good, don't take it. But this is, you know, is going to be the bigger one because it's breaking a support level, and then it kind of went sideways a little bit, then all of a sudden it really shot. So hopefully that was helpful to you to spot out when to take those. Now here's the one thing that I mentioned. Here's the short trade you may lose on just before it gives you the big move. And I said sometimes that happens to me. Let me draw some lines there. That was a heads up early bird there, 4 hour. And we need to, oh, I need to get this back over here. Excuse me for making you dizzy by dragging that across. Okay, there's the, right there, the 1 hour said, yeah, it's weak, it's going sideways, but it was above. The 30 minute, it said yes, but look how it was going sideways. So you say, well, maybe I don't want to take that, but you may have wanted to take it right here. And it went up 14 pips in your direction.
Right.
By the time you got around to it, you were, you know, break even, or maybe you lost a little bit before it started going down. Don't worry about those. It's only a few pips, just to take that as far as, okay, I took that, it didn't work. And then wait for it bounced off that, say, oh, now there's probably a strong chance it's going down here. Anyway, so that's just kind of, that's the art of trading. So anyway,
yeah, I'm picking it up.
So thanks for your question. That was a very good question. It gave me a chance to share some information that otherwise I wouldn't even thought about.
And it's good for other people to experience this, because when they're newcomers, it's only when you've done it for a while that you encounter these types of situations, which until now you may not have had an answer to, but that's how we all learn, I guess.
Yep, and your participation helped more than just yourself, so thank you for that.